Aha! We've got a new guest. This is the IssuesWatch podcast. Hello and welcome to the IssuesWatch podcast. I'm Brad Muniz, your host for the bi-weekly accounting and auditing episodes. I'm an assurance principal at Clifton Larson Allen. And joining me today is Ahava Goldman, Associate Director with the AICPA Audit and Attest Standards team. Welcome, Ahava.
Thank you. It's my pleasure to be here.
Now, I've attended some of your seminars, and they've been really good.
Well, thank you. I remember you. You asked a lot of questions.
Okay. This episode qualifies for Nano CPE credit. If you're interested in earning CPE credit for this episode, hit the pause button now and head over to njcpa.org/nano to find out how. A quick disclaimer, the views and statements expressed herein are our own and not necessarily those of NJCPA, CLA, or the AICPA. Okay, Ahava, I've brought up quality management standards on the podcast numerous times, and Frank and I have talked about it. And the chance for me to hear from the AICPA, not the AICPA, from somebody who I've heard speak about this many times, and talk to people about it. Can you please tell us what the quality management standards are?
Sure, it's my pleasure. So the quality management standards supersede the existing quality control standards.
Okay, good.
And there are 3 quality management standards. Statement on quality management standard number 1, a firm system of quality management, and that's the one that supersedes what we refer to as QC10, a firm system of quality control. And you know, when we changed from quality control to quality management, I kind of rolled my eyes a little bit. But then I thought, no, this is a good thing, because when you think about control, you think kind of like pest control. And when you think about management, you think about asset management. Like, you know, you manage your staff. Maybe you want to control them, but you know, you can't. So we changed it to quality management. The QM2 is engagement quality reviews. And while that's a new standard, what it does is it takes the quality, what used to be called an EQCR, an engagement quality control review, is now called an EQR, an engagement quality review. And it just takes all the requirements for an engagement quality control and it puts it in one place. Because before it was in gas, and it was in the QC Section 10, and now it's all in one place. And then there's QM3, which just had some conforming changes, and there's SAS 146, which is quality management for engagements performed in accordance with generally accepted auditing standards. But mostly when we talk about the QM standards, we're talking about QM number 1.
See, and the one thing I like about it, this is going to sound silly, but you know me, I focus on dumb things. QM2, quality management number 2, changed it to EQR. And I kind of aligned it with the PCOBs. Because we were EQCR, and I was talking with somebody from the PCOB one time, and I said EQCR. They're like, no, we're EQR. It's like, can we just align? So just that alone made me happy.
You've made my day. You've made my day.
But you're right. The big one, the big one, I feel is quality management number 1.
Right. And so what's the big change with quality management number 1? And the big change is that we put in a risk assessment process. So the other change is that there's also a new component, information communication, but honestly, firms have already been handling information communication. We just kind of formalize that. But the big change is we put in a risk assessment process. And what's really good about that is it says to firms, this is not a standard, this is a scalable standard. This is a standard that requires you to think about what your firm does. What are your firm's engagements? What are the risks to quality in your firm? And you need to think about that, and you need to identify those, and you need to put in place what we call quality responses. So not every risk rises to the level of a quality risk. A quality risk is something that, this is going to sound familiar to anybody who does audits, magnitude, likelihood, and magnitude. You know, it's likely to affect your quality, and if it happens, it's going to be bad. So for that, you have to have a response.
I never thought about it. I never thought about it the way you just said it. I've attended a bunch of seminars, never thought about it. So if I have a firm, and the managing partner is responsible for some, as I think you'll say, if I have a firm and we pay accounts payable, well, that doesn't have a likelihood and magnitude to affect maybe the audit. But my hiring practices
Right.
have a responsibility effect.
So let's say that you have a firm in Florida, right? Let's say we're in New Jersey. Okay, so let's say that if you were in Florida, you would have to think about hurricanes. You would have to think, how do I make sure my information stays safe if there's a hurricane? In New Jersey, we don't got to worry about that so much.
As much, correct.
We don't have to worry about our servers being flooded. Or how are we going to conduct business if everybody's evacuated?
Okay. I hadn't even thought about that aspect of it. I mean, everybody thinks CPE, your practice aids, all
Right.
of that has a higher likelihood too.
Right.
Than the paying of the bills.
Right. So, and then we talk about a response. What's a response? A response is policies and procedures. So that's the big, big difference with this standard. And you know, firms, your listeners are not starting from scratch. They already got a system of quality control. So what do you have to do? You can't set it and forget it. This is why people say, why are you making us do this? Because it's been 10 years since we changed the standard. And people complained that the standard was too prescriptive and making us do things that weren't relevant to your firm. Well, now we've got a standard that says you got to do what's relevant to your firm. So you got to take the time, because it's part of managing your practice, and sit down and say, what are these quality objectives? So the standard is part of the risk assessment. You've got quality objectives, which are all laid out in the standard. The standard says, if you think you need additional quality objectives, you got to establish them. You're not going to need additional quality objectives. I will tell you, that is a CYA requirement. Don't even worry about it. Then you think about, what are your quality risks? Your quality risks are unique to your firm. Now, they're pretty much going to be, there's the inverse of the quality objective. That's your biggest one. And we have a great practice aid that I'll talk about a little later that lists a whole bunch of risks that might be appropriate to your firm. And then you think, okay, what are going to be my responses? What policy and procedures am I going to put into place? The standard has some required responses. Unlike the quality objectives, where all you're ever going to need is right there, you're going to need additional responses. Because, the standard's really long, and it didn't even have all the responses. And every firm is different. Every firm is unique. There's a lot of commonalities, but every firm is unique. So you're going to need additional responses.
So now, you said SAS 146.
Right.
There's going to be people out there that say, I only do comps though. Does this affect me?
Okay, so that's a really good question. The Statement on Quality Management Standards apply to firms that have an accounting and auditing practice. So if you are doing engagements in accordance with GAS, if you are doing engagements in accordance with the Statement on Standards for attestation engagements, so that's attestation examinations, attestation reviews, AUPs. Right. If you are doing engagements in accordance with SARS, Statements on Standards for Accounting and Review Services, that's your reviews, that's your comps.
Mm-hmm. And SARS 26, I think, came out to put it together.
Because we put out SARS 26 and SSAE 23 that just had conforming language to make it all, them be aligned with the quality management standards. But if you're only doing comps, I'm really hoping you care about doing quality work in comps. Now, so yeah, this standard applies. Is it going to be as heavy a lift as for the firms that do auditing? No. Because it's you have different risks.
Right.
And therefore, you have different responses.
It gets back to you have different risks means you have to assess the risks.
Right.
Even though it's comps reviews, SSAEs, you have to assess the risks and the impacts on your types of engagements.
Right. And sad to say, peer reviewers have seen comps done wrong.
No, really?
Shocking, I know.
Home
So yeah, this standard applies. But again, it applies to your practice. So yeah, you got to think about it. And by the way, you got to start thinking about it now, because this standard is effective by December 15th, 2025. This is not like a standard on reporting where you say, oh, I'll worry about it, I'll do my whole audit, I'll do my whole comp, and then I'll look at the new standard. No. You have to have this standard. You have to have done the risk assessment and implemented the risk response. That is, put in policies and procedures such that the system is operational by December 15th, 2025. We issued the standard in 2022. That was 2 years ago. Mm-hmm. It's effective next year. We gave people 3 years. Now there's, October? So we're 15 months away. That is not a lot of time.
Could have given them 2 decades.
We could have given them 2 decades. People are like, well, will you give us an extension because we're not ready? I'm like, always jam tomorrow? No, at some point the standard has to become effective, and that point is going to be December 15th, 2025.
So to help the people, because wrap it up, to help the people with this, are there resources that are available?
Yes, we have a lot of resources, and they are on our website. So if you're an AICPA member, they're available to you at the low cost of free, and that link is going to be https://www.aicpa-cima.com/auditqm. And what will you find there, you ask? You will find a practice aid. The practice aid is great. It comes in 2 versions, one for sole practitioners, one for small and medium-sized firms. It has an overview of the standard. It has a chapter on the risk assessment process, and then it has a library of potential risks and required and potential responses that firms can adapt to their needs. It also comes with an Excel spreadsheet that you can use to perform your risk assessment. It's got a mapping document that tells you how the old standard compares to the new standard, or vice versa. It has a checklist that tells you the steps you need to go through for this whole process. And we also have a webinar series.
That's great that it's out there, because one of the things that people say is, well, the smaller firms, how they adjust, and the fact that you're putting this out there and free is amazing. And I like the Excel spreadsheet concept, because people are trying to share that, so at least now there's a resource available. Go get it, go download it, okay? So I want to thank you. Again, one quick announcement. You can learn more about quality management standards at a webinar AHAVA is presenting for the NJCPA. Attend on November 12th or November 26th. Register at njcpa.org/events. And as AHAVA had mentioned, you can access quality management resources at AICPA-CIMA.com/auditqm. And of course, be sure to join the Society's Accounting and Auditing Standards Interest Group. Sign up for free at njcpa.org/groups. AHAVA, you bring the energy, really. Thanks for joining us today.
It's been my pleasure. Thank you for having me.